Good morning, everyone. Today's date is Tuesday, April 21st, 2020, and I am your host, Tom Kaczynski. Welcome to episode 52 of Coronavirus Central. The website is up at www.coronaviruscentral.net, and if it doesn't work right, just hit the refresh button, F5 on most computers, and it should update. We had to change some of the settings. The feed has changed in this, which may be causing problems if you are someone who uses an independent feeder. I'm not really sure why it happened. It might be something with how my host does it, but the main feed now comes from coronavirus-central.castos.com, and if you add /feed/ at the end of it, you'll be able to access the feed. So thank you to everyone who's welcomed me back. I appreciate it, all the kind comments. I know you guys have been missing the show, so I am back definitely to provide the hardest hitting commentary on the world of the coronavirus. And like I talked about in the previous episode, we're really going to try hard to understand what's happening in the economy, what's happening with the public health issues, what's happening with all these questions in a way where you really understand what's at stake, not 5-second little sound bites from whatever agency want to present the argument to you. And it's a hair short of 5 in the morning as I'm starting my recording, and usually, mercifully, I'd be asleep at this time, but I was waking up. I guess my wife had come to bed rather late. She wasn't feeling well, and because when she takes certain medicines, she has a hard time sleeping, as a lot of people who are on medical care understand there are side effects to things. Certainly our family's not immune to that. And so she had on some program with some podcaster who was talking, and he's like, well, I see these nurses dancing, and if they have this much time to be doing this, they don't have this time to deal with this disease. And it's just like, it's absolutely crazy to me how people make their decisions about what they believe in the world. And I'm not saying it's an unrealistic thing to see if behaviors don't match what's being said. I think that's perfectly fine. But the problem is humanity in general has the short-sightedness of being unable to understand things it can't see. And with virology that's happening in exponential functions, it fits perfectly into what we are incapable of understanding. And so I watch a lot of otherwise intelligent people make all sorts of insane and absurd presumptions about a world that they haven't even bothered to look into. They're like, well, I saw one video of a hospital that was empty, and therefore coronavirus is a hoax, and the whole world is in on it. And it's just like, I don't know. I mean, I've reached the point where my ability to be shocked by people's ignorance is pretty much non-existent. But nonetheless, it is disappointing because I'm watching people make incredibly foolish decisions. And we talked in yesterday's episode, and when we reset the virus, that literally people might be blithely walking into lung AIDS because they were expecting it to be an immediate death, and the fact that they've bought a reprieve means they can go back to the world as usual, or at least they perceive it as such. And now you hear stories of the state of Georgia, the state of Florida, other states throughout the South primarily rushing to open up by the end of the month, and that's the choice that they're making. You as an individual should not make that choice in the absence of good information, or especially with such information as we have being so dangerous with respect to how many people are getting sick, how many people are getting hurt, what this means for long-term health conditions. And we don't know the answer to those questions other than to say the first bits of evidence we're getting are disturbing, that this could be a long-term condition that has a lot of problems for a lot of people. And we're all rushing back on the theory that the economy falling apart would be worse. And the economy, that is the real production of goods and services that people need to survive, shelter, safety, nutrition, fresh water, heat or cooling, depending upon where you are, is something worth considering. But I want you to see today, in today's episode, what is really happening with the economy, and that we are kind of being pushed into a choice here. One of the things, two things I've said throughout this whole debacle. Number one is that if you're forced to choose between an economy and health, and you choose economy, you're going to get neither. So that's the first thing you have to remember. And you can sometimes defer that cost in the same way you can defer interest on a credit card. And that's part of the solution that's being put out there, saying that, well, we'll go ahead and you'll get the benefit now, but the cost in health will be later. And that honestly is the sort of price being put out there to people being told to risk their lives at the peril of getting COVID. And then you have to wonder, as a social contract, are people going to be taken care of when they get sick? Well, the history of the American healthcare system is not very comforting in that regard, and I think for those who are at the lower level, whose insurance is largely dependent on their employer, you need to be very aware if you're not able to produce because you go out there and you heroically get sick, right? Who's going to take care of you? Medicare isn't, Medicaid isn't. Do you want to be waiting a couple years for Social Security for saying that COVID is a chronic condition, especially when you have a government trying to undercut that as much as possible, right? That's the first part of the thing that we're looking at. The second part of it ends up being, okay, so let's say you go back. Who's actually going to benefit? Who is winning in this economy? Who is losing in this economy? Because economies do have winners and losers. And what's interesting is at the micro scale, we think we understand our economy. We have all these moral values that we put around it. You go work hard. You go get money. You get your money. You get to pay for things. You get things. And you get to, live in a world where the rules make sense. But the funny thing is the rules of money and finance, the higher you go up the ladder, the less they begin to make sense. The money that you will have slaved your life for, whether you're an individual working, as a jitney at the bottom, or if, let's say, you're a corporate executive, there are levels above where you're at where literally money gets made out of thin air. It's inserted into the market by people who use it as control mechanisms, and then it floats down to us at the bottom. And that world is continuing as well as it can. Now, look at yesterday. Oil was literally trading for where people were getting paid to take oil, and we'll talk about that at the very end of this episode. At the same time, the stock market continues to trundle along, regaining value. And how does that happen when half the economy is shut down, when we're dealing with, over 20 million people directly out of work? And the answer is there's a disconnect between finance, that is to say what money is artificially doing, and the economy of goods and services. And so ultimately, one of two things has to happen. Either that finance snaps back onto the economy and that we pay the difference in terms of accrued debt, interest, and inflation that happens, or we don't and we let this economy go away to replace something else. And the choice very well may not be ours. If we get a second wave of the virus that's bad, as a lot of us fear, we will end up in a situation where I think we will deal with those consequences either way, and then you have a Great Depression-like scenario or a Great Recession, whatever you want to call it, versus the other way where if people limp back into this, well, then you go back into the old world that existed before, which for some was good and some wasn't so good, and you end up with a situation where you're going back, but someone owns a lot more of the assets, there's a lot more debt out there, and that ultimately your situation is probably going to be less good, but you'll say, hey, at least it's not the virus. And that's the funny thing. We compare what we live experientially, right? If things were bad yesterday and mediocre tomorrow looks like a good day. What I am here to tell you today, and what I'm going to try to lay out, is that this choice that we collectively are going to make as a society has major consequences for how we live going forward, and whether or not we want to live in a society where individuals have a lot more freedom and choices at an economic level, or whether we want to be into a society where the strictures of debt that are created to bail us out of this crisis, or I should put more accurately, to bail the existing financial system out of this crisis, if we're going to submit to that. And if we do, we are heading towards a future that looks a lot like feudalism, and not like the pleasant stuff I talk about with New Albion, but the old days where basically you were serfs because you owe so much money to certain characters who can then enforce that upon you. And that is something that is the danger of the new era. And we're going to have to make decisions. Different countries are going to have to make decisions. Different states are going to make decisions. And depending on the decisions they make, we may see a divergence within the United States and or other countries and existing global pacts with who is going to work with who and how that's going to work. We'll talk much more about that piece of the puzzle on Wednesday. But I want you to understand the real economy of how it works, and this is going to be a heavily annotated episode. I got like 6 or 7 articles lined up to cover through this, but I want you to know what's at stake, because I think that level of depth is something that has been lacking from this discussion, and I want you to understand the choice. I want you to understand why I am going to say to you at the end of this episode today, we are better to have the economy as is break and build something better that's fairer for people, for 99% of our fellow citizens in the United States, and I think this is true around the world, than going back to this old system, because the system that existed was not your friend. The fact that you made a little bit of money and may have done more well or more poorly in that system doesn't change the fact that fundamentally you were in a system where your money was losing value faster than your ability to make it in most cases. And the fact that you were doing better than other people hid the fact that we've generally been on the downturn for a very, very long time in the United States, and a lot of that has to do with the way banking functions. So that's going to be today's episode, and we're going to talk about that from the perspective of real-life experience, what people are experiencing on the ground, and we're going to talk about it from an equity perspective, because I think that's what we have to do so that you understand. Remember, the thing about governments and economies is this, that ultimately all these fictions, and they are fictions, dollars are fiat money, they don't have any intrinsic value, are caught up in social obligations that we choose. So if we choose to ignore them, for instance, if the government passes a law and there's one guy who's let's call him the mayor. The mayor passes a law in a town of 1,000 people and 990 people don't want to go for it, the law doesn't have a whole lot of validity. Money is just another form of the law. That's all it is. And if we choose to accept it as a means of good in trade and services, saying, well, this is absolute and this is a contract and I'm going to stick on it, that's one thing. Conversely, if we say, no, the contract is broken, that this is not what it appears to be, and we're not getting a fair deal, that is a choice you have. And it is a choice you have. Don't underestimate your own powers. The fact that the media, the corporate structures, all these things out there tell you that you have to do certain things, or things have to work a certain way, now you have some time to sit and think if you want things to work that way, and maybe you don't. And a lot of people are starting to draw the conclusion they don't. And if you think the rush to get back to work isn't directly caught up in this desire to return to a comfortable paradigm, where it's the left and right pinging at each other and the old wars that accomplish nothing except getting us all poor, broken, pissed at each other, then you're not seeing the bigger picture. And it's no accident, I think, as this has kind of gotten bad, but in a slow and painful way, that the corporate media has kind of shied away from drawing the question of what the threats are to society and made this into a comfortable partisan or international conflict, whereas a big part of the conflict, like I said on my Friday live show, is this question of the people versus the system. And it's from that perspective that I think we really need to look at this today, because you need to see how you're getting screwed to decide if you're okay with it. And if you're okay with it, hey, that's fine, but most people don't know this stuff, and I'm going to give you the virtue of a lot of years of knowledge of having to study this that will maybe change the way you think about the world a little bit, which is something good if we can do that in the show. So let's just go real fast through the statistics. I'm not going to do a lot of depth here because we're trying to do that more quickly, although tomorrow I will go into the U.S. states in detail. Right now, update as of 5 a.m. Eastern Time. This is as Tuesday, April 21st. We are sitting on a confirmed number of deaths, 2.5 million, basically. We're looking at those are case numbers, 2.5 million confirmed cases, 171,529 deaths, and 670,511 recoveries. The United States has 786,558 confirmed cases. That's a gain of 135. 43,018 deaths. That's a gain of 1,708 deaths. And recoveries are up to 85,920. That is a gain of 19,608. So I'm glad to see that number going a lot bigger. Finally, that's some good news there. And it would mean that our on-the-run number is sitting just a little above a third. So about 34% of cases are leading to death that have resolved. But that number is starting to improve as people come out on the recovery end, and that's good news. Obviously, we expect that to continue. Just your other big movers: Spain, 200,000. I'm just rounding up to save time. Italy, 182,000. France, 165,000. Germany, 147,000. UK, 126,000. Turkey is up to 91,000. Iran's at 84,000. Russia's really coming up this list fast, 53,000 there, and 41,000 in Brazil. And if we're looking at the numbers, Brazil's death rate is pretty high, 28.45. That's 7%. The European countries still continue trundling along with 400 per day. Overall death rates are sitting between 10 and 13%. Our Canadian friends coming up a little bit. We're at almost 38,000 cases there, with 1,753 deaths in Canada. And that Ireland's actually jumped onto the top page here. They haven't seen that before. 15,652, 687 deaths. We'll have to look more into those numbers maybe for Thursday. And India is at 18,658 with 592 deaths. So basically, countries with big populations are coming to the front here. Not surprising, and we'll keep an eye on that going forward. The basic trend patterns hold. One thing to be mindful of, a lot of these countries coming up seem to have sort of a level rise, but there very well may be questions about the quantity and quality of testing, and that's always a concern. So one of the things you guys probably caught last week was that we saw 5.2 million people go on to unemployment. So that number just gets bigger and bigger and bigger all the time. And we're going to talk about some of the questions related to that. But I wanted to go ahead and bring up this piece here first, that we're going to see that Florida is releasing their unemployment numbers. And I want to talk about the problem of unemployment is that unemployment doesn't necessarily mean you're going to get your money as fast as you need or the money you used to need, especially if you have prices going up at some point. And I'm just using Florida because I was looking at them, and we have a lot of Floridian listeners. But I just want to show you what it looks like trying to actually get this. And this piece is from the Tampa Bay Times, so that you have an opportunity to see that people who are trying to get to unemployment often can't. So this was released as of yesterday by Lawrence Mower, okay? Florida releases unemployment numbers, 1.5 million claims filed, just 40,193 paid. The news site is an effort at transparency, state officials said. So just to put this in perspective for you, so at a time when people have lost their job in massive numbers, and they have needs, they have bills piling up, right? We have 40,193 divided by, 1.5 million. We'll just put the numbers in here so you can actually see it. 2 more zeros there. So basically what they're saying is they have been able to reach in this number 2%, 2.67% of the people who they needed to be able to reach, okay? So ultimately there was a 1 in 40 chance of you actually getting the help you needed if you were in the state of Florida, if you filed unemployment. And we look at this and we compare this to what happened in other countries, okay? The other countries went ahead and just got money to the people and did what they could. In America, we couldn't do that. We chose instead, we have to be fair, and we have to go through the system, okay? But the system is screwing everyone who needs help from it because there's a lot of people. And we're going to talk about this from different perspectives today. We're going to talk about it from an unemployment perspective. We're going to talk about it from the perspective, I don't even need to talk about from the perspective of people trying to get their stimulus payment. Many people have struggled with that nightmare of a system. But that's certainly another angle. And we're going to talk about from the perspective of small businesses who through no fault of their own are in trouble, and yet they're being destroyed into a massive consolidation, where at the end of this, what we're seeing is too big to fail is getting all the help, and the little local mom and pop joints are getting shut down. And it's just one more example of a system that really isn't fair to either side. We look at small business and citizens as being against one another a lot of times. Politically, that tends to be the case. But I'm telling you, the whole system is kind of working against you. But let's look at Florida. Let's just look at the people who are no fault of their own. They've lost their job. And we're not even talking about all the groups of people, self-employed, gig employees, all these people who are just screwed and have to suck it up and somehow get through. Let's skip over that. Let's just look at the people who are under normal jobs and trying to do what they're supposed to do by the system. So this article goes, just 40,193 Floridians who have filed for unemployment since March 15th have received their benefits, according to a new website the state launched on Monday. That's less than 3% of the more than 1.5 million claims filed since mid-March, when the state saw a record surge in people thrown out of work because of the coronavirus. The new site, which is expected to be updated daily, provides the first look at the scope of the state's unemployment crisis and the workload faced by the Department of Economic Opportunity, the agency tasked with processing claims. Of the more than 1.5 million claims, just 162,039 have been processed by the state to determine if the person is eligible for unemployment. Of the 162,039 claims, about 41,573, about 1 in 4 were found ineligible for assistance. So let's just stop there for a second. Let's say of this 1.5 million claims that a quarter of them are found inadequate, right, for whatever reason. That would equal out to 375,000 total claims will be thrown out. So what's going to happen to those people? Well, they're going to go work, and they're going to either get money or they're going to get their goods some other way. They're going to break quarantine if you actually were trying to have these shutdown orders, and it renders the whole thing moot and ineffectual, right? Conversely, what is going to happen with that many people being mad and angered by the fact that they can't work in the system? And a lot of these people are being rejected for technical reasons because a lot of people exist outside of the IRS-driven economy, and the fact is the government has used this as a means of compulsion and control because that's how government thinks, and that goes up to D.C., to the Congress, and to the presidency for passing a lousy bill in the CARES Act that doesn't care and doesn't help. But that's fine. This is what they're going to do here. We're going to see what's happening. So nearly $60 million has been paid out to 40,193 Floridians, but the state has been slow to pay out the $600 per week federal employment benefits. Of the $60 million, just $14.3 million is federal help. And this is the problem about what's happening. These things, they don't know what they're doing. We took a situation where we needed quick action, and we threw it into one of the most labyrinthine bureaucracies you'll see, which is the social welfare system. And it's going to fail, and it was set up to fail. And you know, there's a thought here. There's something called the Cloward-Piven strategy, which is, it goes like this. That if you want to have big social welfarism, you go ahead and have small social welfarism fail so that you go in there and people want a much bigger model. And it could be very possible that I think some people on the Hill, knowing that would happen, went ahead and gave us a lousy bill. I think the Democrats know how to do that well enough. And I think the Republicans signed it because they like the idea of a minimal approach, because that's how they generally like to approach these sort of questions of not having social support for people. And so we ended up with a bill that was doomed to fail from the beginning, except in the most important thing it did, which was to go ahead and take care of people at the top. But let's continue. So, because I want you to see what people are really dealing with at the ground. And if you're someone who's had to deal with unemployment or anything, like I've looked at it, I'm self-employed. I can't file in my state because they haven't figured out how for me to file, because the government made a whole new class of people out of this that needed help who can't get help. So, for that reason, I want to say thank you to everyone who sends support via Venmo, CVC, PRV, or via mail. That's always helpful. P.O. Box 35, Greenville Junction, Maine, 04442. All right, so that way I can keep doing this and tell you the things you're not supposed to be told, because Lord knows there's no money in telling the truth, and corporate sponsors won't touch me with a 10-foot pole. But that's fine. Last week, Governor Ron DeSantis admitted his own department still had not given him those figures, which are essential benchmarks for tracking the state's progress. DeSantis last week replaced the man in charge of the state unemployment system with Department of Management Services Secretary Jonathan Satter. In his statement announcing the new website, Satter said his number one goal is to make sure Floridians get paid quickly. This will start with complete transparency, efficiently streamlining the reemployment assistance process, waiving all red tape, and ensuring hurting families have the aid they get through COVID-19. Nice words, but it probably won't work in the system. The 1.5 million claims filed likely includes people who have filed 2 or 3 times out of desperation or frustration with the state's unemployment system known as Connect. It doesn't include the people still having trouble filing at all. The system, which had already had a history of problems, has been crippled by the crush of claims, prompting the state to revert to paper applications. More than 86,000 of the 1.5 million claims were filed by paper. Nearly 800,000 more claims were filed on a new online application form the state launched last month. Despite upgrades to Connect, 100 new servers added to the system, the state spending up to $110 million on private call centers to back up the site, it has been struggling to keep up with the workload. To relieve the system, DeSantis last week issued an executive order waiving the requirement that people log in every 2 weeks to claim their benefits. I mean, and if you've never been on unemployment, by the way, I have before, you have to go and you have to talk about all the places you're trying to find a job, and then you got to look at all that stuff, and then you have to say, okay, well, yeah, I used to be an engineer making $100,000 a year, but why aren't you taking the job to go, slough things at the Amazon warehouse over in Clearwater there? those sort of things happen, and people are just going to get more and more angry because they are victims in this. And look, we all are victims. COVID came about, whoever you want to blame. I mean, there's some small group of people maybe you can blame, maybe you can't. But ultimately, the rest of us are ultimately victims to this pandemic, and we needed a social response to recognize that. But top to bottom, we've seen this effort to play winners and losers in this game. And so you end up with a lot of people who are going to be very mad. So you have, in theory, somewhere around 1.5 million people in Florida. 40,000 are getting helped. So what does that mean for the other 1.4, what we look at, 1.46 million people? And maybe the number's not that high. Maybe the number's a lot higher in Florida who are not being helped. The idea is get back to work as fast as possible. Okay, fine. And people are probably going to do that in Florida because their system failed them. But ultimately, I think a lot of people are going to ask the question, is this something that's okay? And, what are we going to do? You need money. There's going to be shortages. There are going to be problems. So revolutions historically happen, as I often tell you, when people are unhappy about the inequity of the system and when they don't have the ability to meet their basic needs, and their basic needs being food and shelter, right? So let's go ahead and talk about food for 1 second before we go back to shelter, okay? This piece is from penlive.com, and this was published, let me see if I get the right date here. This was published here as of April 16th. By the author's name is Sue Gleiter at Penn Live. And I want to talk about this because they asked a good question. Will food prices rise as the coronavirus pandemic continues? And this is just the mainstream sources. I'm not going to go into every little detail we could of what's happening at the level where the producers are being paid to go ahead and not grow things or not raise animals. And there's just not enough supply because a lot of that supply went into the fresh markets. It went into restaurants directly. It went into other food sources beyond groceries that have different food supply chains. And it's going ahead and crushing farmers, ranchers, and people at the first level of production. But right now we're just looking at what's happening day to day. And this piece she put together at Penn Live does a good job of kind of letting you see what it looks like on the fly. So food is at the front of most shoppers' minds these days. With families sheltering in place, grocery bills are one of the biggest expenses. According to the latest statistics, grocery sales jumped nearly 27% in the past month as Americans stocked up on food and goods due to the coronavirus pandemic. As the public hears more about meat processing plants shutting down as workers fall sick, farmers destroying crops, and dairy farmers dumping milk, it's hard not to wonder if food prices will be impacted. Chenna Chaka, owner of Passage to India restaurant in Harrisburg and Jewels of India in Carlisle, said his family is spending more on groceries at Costco, Walmart, and Indian stores. He attributes it to the fact every time they shop, they stock up on extras no matter the price. That's the unfortunate thing about being in a situation like we are right now, he said. But Chaka, who carefully watches food prices for restaurants, said he noticed slight price increases on staples like bread and eggs. Without getting into a complicated economics lessons, food prices are based on supply and demand. Right now, the formula has been shaken in certain sectors. There's currently no inflation barometer because the U.S. Labor Department's in-store data collection efforts came to a halt in mid-March during the coronavirus. It's too early to tell what all of this will mean for consumer prices, said the Pennsylvania Farm Bureau in consultation with John Newton, chief economist at the American Farm Bureau Federation. Typically, retailers don't immediately make adjustments to prices that consumers pay, wrote PFB spokesman Darren Euchre in an email. Alex Beloga, CEO and president of the Pennsylvania Food Merchant Association, said retailers became concerned about food pricing when the panic buying and hoarding started in March. As an example, he said egg prices spiked and supplies dropped from shoppers stocking up. And I've seen it up here. I'll tell you what, 18 eggs in Maine cost you $5 right now. It's crazy. Before Easter, egg prices doubled and then tripled, but have started to level off. And to be clear, when he's saying leveled off, it's not going down. It's staying at a new plateau. It's just not rising anymore. So keep that in mind. At this point, Beloga said it remains to be seen how the coronavirus will impact food prices. This month, milk prices remain the same as March, according to the state's milk marketing board, but that's likely to change. Already struggling dairy farmers who survive on business from restaurants and the food service industry, including school cafeterias, have been hardest hit. Processors, including Harrisburg Dairies, have asked dairy farmers to dump their milk for 2 consecutive milking cycles, primarily because of the school closures. And so, just so you understand, in the agricultural sector, what ends up happening is, the cows need to be milked. this is the way it is. I mean, otherwise they stop producing, and so they have to either use it, dump it, or slaughter them. And if they have to keep not being able to do it, what they'll do is they'll sell the herd off to someone else, or they'll convert it into meat. And those things happen, and that's where you're going to have the longer-term questions that are problems, especially in the meat industries. There has been some growth in grocery and other retail sales in the interim, but that was a mile away from what we lost in food service, Alec Dewey, president of the Harrisburg plant, told Penn Live earlier this week. New prices for May will be calculated next week, so any changes due to farm prices won't be seen on the retail level until next month, said Emily Bard, spokeswoman for the Center for Dairy Excellence. And just so you know, in Pennsylvania, the way it works is they mitigate what the prices can be. They combine all of it, and they put it together. But it's a good state to look at, actually, because it's a state that has a broad sector of agriculture that would be very indicative of problems that are coming. All right, so meat might also take a hit. Reports indicate meat shortages and price hikes are on the horizon as processing plants across the country shut down due to sick workers and high absenteeism. On April 12th, the nation's largest pork producer, Smithfield Foods, indefinitely shuttered its Sioux Falls, South Dakota plant after 300 out of 3,700 workers tested positive for the virus. Several other producers, including JBS's SA facility in Souderton in Montgomery County, have closed. That's just outside Philadelphia. Scott Carnes, CEO and president of Carnes Foods, noted there are so many meat processing plants in operation in the U.S. they would take a massive amount of planned closings to impact stores. He said the prices on poultry have actually dropped in the past couple weeks because restaurants and other institutions are not open. Carnes is selling boneless, skinless chicken thighs for $1 a pound this week. In addition, Carnes said shoppers aren't encountering as many weekly specials on foods because manufacturers have stopped offering the promotion due to supply issues. So he's making the argument that what we're seeing is higher prices just because of the fact that there are these supply issues. They have too much supply, so they're not getting prices. And it's fair. It's a good question, actually. How much of the markup is just retailers taking advantage of it? Nonetheless, you are going ahead and decreasing the ability of production on the front end with things that cannot be simply picked back up. So if you open things back up and you put this food supply out there, are you going to have problems? Well, yeah, I think you will. And we are watching how this shakes out over time. But for the moment, the food supply seems to be holding okay. There is a lot of supply in chain, but there are problems. You're hearing, those voices are getting louder down at the farms, down at the meat packing plants, and all these places. It's something we're going to have to very much keep an eye on, and it's something I continue to be worried about going forward, because as time goes by, these problems are beginning to accumulate, and it doesn't take a lot of things going wrong for a system to go badly. Like we figured out up here in Maine, the reason why we were having a problem not getting eggs isn't that there weren't eggs to be produced, but no one was making the cartons because we didn't have to produce locally. And it ended up being something, I think they're working around it now, but it's weird how one little piece can kind of mess it all up pretty badly. So definitely something to be aware of. So now I'm going to jump back to a piece from The Atlantic. And, I have a very love-hate relationship with this magazine, and I'm going to tell you why. The Atlantic is along with The Economist, it's one of two basic magazines in the U.S. The Economist, The Atlantic, Foreign Policy. These are magazines for elites, by elites, and to help elites. And they do very intelligent commentary about problems, and then the solution to every problem, according to them, is more globalization, because that works to their benefit. But in spite of that, and in spite of my profound disagreement with their general outlook, their criticism of what's happening around is often very smart, and some of the letters they have are very good. So I'm going to share a piece from this. It's called "The Second Phase of Unemployment Will Be Harsher," and this was published on the 19th, I apologize, by Victor Tan Chen, who's the author of Cut Loose, Jobless and Hopeless in an Unfair Economy, and Ofer Sharon, who's a professor of sociology at the University of Massachusetts in Amherst, okay? And the subheading is, "For American workers displaced by recession, widespread public sympathy soon gives way to moralizing anger." And what it's saying is that, and it's a smart piece, it's predicting what is going to happen, which is that the people who are working are going to get mad at the people who are not working. And they're going to say, why the hell aren't you working when I'm working at the same time? And what happens is everyone's a victim of this virus, but then it's assumed we should go out there. And ironically, the more risks people take, the more they're going to demand others do them. So rather than looking at the boss who's saying, hey, go take these risks, because of how partisan this is going to become, you're going to see people blame one another, where one side is going to say they're a bunch of lazy, effete socialists who aren't willing to work for a single penny and who want to get money for nothing, and the other side is going to say they're a bunch of ill-informed ignoramuses who don't know the first thing about sciences, who are going to go die because they want to follow their fearless leader. And the problem is, as that hardens, that makes it even harder for things to work. And the reality is that for unemployment in this case, no one is to be blamed, and yet we are not letting our unemployment policy be guided by what is sound finance, by sound economics, and certainly not sound virology. We have half-hearted, reactive solutions where one bad situation creates the next bad situation. For those who are on unemployment, I share this piece, or for those who might be on it, to know that in theory, the idea that you're going to get help that's promised in the crisis, you will become an afterthought very quickly. And this speaks to how that actually happens in cases like this. So, let's take a look. In the past few weeks, the United States has witnessed an unprecedented spike in jobless claims that has overwhelmed state agencies, which I shared with you from Florida as just one example, but many states are in the same boat. Alongside a health crisis and an economic crisis, we are now entering into a devastating period of mass unemployment, one that decades of research tell us will leave deep financial and psychological scars for the workers and families trapped within it. Today, Americans across party lines recognize the need to act quickly to minimize this harm, but that bipartisan support will soon fade as it has in past recessions. If Congress and state governments are going to pass forward-thinking legislation to help unemployed and precariously employed workers, now is the time. And to be very clear, when they're talking about these financial and psychological scars, that ultimately what's going to happen is this is going to get politicized. You can see it, and it's going to happen real quick. The moment Trump says we can't pass this because it's communism to help people, will be the time it becomes impossible to do anything else to help people. And keep in mind, the banks have already been bailed out. So the question of who gets helped and who doesn't is that the question of fairness, that the question of the equity of who is going to be helped. Okay, so having researched the experiences of unemployed workers over the past 20 years, we expect the coming unemployment crisis will have two distinct phases. In the first phase, the country will largely respond with a sense of solidarity and compassion for the millions who have lost their jobs. Americans will recognize that the external forces, the coronavirus and government policies to create social distance, have triggered these mass layoffs, and they will see the plight of unemployed workers in that light. Those who lose their jobs will struggle to make ends meet in a standstill economy, but they will be at least spared some of the blame leveled against the jobless and other economic downturns. When more than 20 million people file for unemployment in a month, even the hard-hearted will have trouble casting them as idlers or parasites. As a result, there should be sufficient political will to continue generous government support, perhaps even expanding upon the $2 trillion stimulus package Congress recently passed, which dramatically boosts unemployment benefits and extends them to gig workers and other people who don't normally qualify. Now, I will say in theory that's true. In practice, a lot of those people just can't get it because the Congress went ahead past this, and instead of helping people, left it to the states, and every state defined this differently, and some people basically got stuck in a hole where they can't get out of, including self-employed people, as best I can tell, in the state of Maine. And I'm just using my own personal example, but there's other people in that same boat that are really in a bad spot, and, ultimately they say, well, go work. Anyway, eventually the outbreak will subside and economic conditions will improve, maybe. My interjection there. Yet for workers who remain unemployed, the situation will worsen. We are likely to see a repeat of the unemployment crisis of the Great Recession, but the underlying dynamics will be amplified. During this second phase, companies will begin to rehire workers. If the past is any guide, many employers will use this opportunity to replace some of their former workers with cheaper and more contingent labor. During normal economic times, slashing wages or stripping away job security prompts a backlash of protests and bad publicity. But lowering such labor costs is easy when the economy is stalled and workers are grateful for any opportunity. More broadly, this crisis will accelerate some long-running market trends toward industry consolidation, reducing one's choice of potential employers, automation, in which machines replace human labor, and worker precarity, which happens when the convenience of employers and customers entirely overrides the well-being of individual workers. Even with the payroll subsidies, the stimulus legislation provides to small businesses. And remember, people couldn't get those loans because they ended up being basically bankrupted pretty quick because the Congress and people at the top were telling their friends where to go get the money first. So by the time you could get to it, the funds were exhausted. I mean, this stuff really happens. This is literally how corrupt America's been during this whole thing. But you need to know it because that's really what it is. The prolonged shutdown will likely destroy many mom-and-pop businesses that have already suffered from decades of brutal competition with the likes of Walmart and Amazon. One thing that kept service jobs from being automated was the sense that customers prefer human interaction, but social distancing has enhanced the appeal of self-service kiosks and even delivery drones. Once the pandemic subsides, people might go back to their old habits, but corporations do not typically let such opportunities for cutting costs go to waste, as we have seen whenever efforts to organize workers prompt employers to suddenly bring in more computers and robots, outsource work to contractors, or move jobs entirely offshore. Given how employers are likely to act in response to the economic downturn, many of those now laid off may remain unemployed for a prolonged period. In particular, companies eager to hold down payroll costs will hesitate to hire back older and more experienced workers. They are likely to be left behind and remain in jobless limbo long after the economy has picked up again. Meanwhile, the old stigmas against unemployed workers will resurface as memories of the initial crisis fade and people find new reasons to fault others for not pulling themselves up by their bootstraps. Even today, we see hints of what's to come. Some of the country's most prominent conservative ideologues are already complaining about how Congress's top-up of employment benefits encourages people to drop out of the workforce. And that's true. You're going to see a lot of people say you should go work for nickels on the dollar compared to what you have to do. And if we go ahead and we rush back to the economic world we used to go before, that is the choice that you will have. What people don't realize is there is a moment where you have a lot of choice and you can negotiate now with people who are above you. If you're the Amazon warehouse team, like what's his name? Chris Smalls was his name. The guy there, he got fired, but he is now fighting the biggest power in the world. And it's not often you can do that. It's really a special moment where the many, many failures we've had in policy have created one moment where we can potentially go ahead and pick fights with things that are far larger than ourselves because we have literally been the single nail that punctures the tire or punctures the mattress. And that's something that, that conversation needs to be had because ultimately, once things go back to normal, if that's the decision we make collectively, we rush back to the old world, you're going to have twice the work with half the pay, and you're going to have to work even harder to exist in a system in a time that's going to be worse. And that's because you are factoring on your back a greater share of the costs that are at levels above you that you're not even looking at and saying, well, I'm just doing my job as a good American. And I want to put this out here, too, and this is important because it's really for my right-wing friends rather than my left-wing ones. Left-wing people are going to understand this argument easier. But for the right-wing people who are listening to the show, the idea that you're getting a fair shake depends upon this idea that you're getting fair payment for what you're doing. And what I would suggest to you is that there are levels at the top that are so fundamentally unfair with this system and how you, me, every one of us is having the value of our dollars reduced so much that working now and understanding that we are all now part of that 99% is something that's really important. I understand you're willing to work hard and you don't want to live in a world where work has no utility, and I share that conjecture. I mean, I've written a lot about that. But conversely, for a very long time, we've been going ahead supporting things where we've basically allowed ourselves to be emotionally blackmailed into acting against our interest, into paying exorbitant debts. I mean, whether it's young kids who go to college and get an education of questionable value and then are paying until they're 40 years old, what we've had is a debt-driven system where ultimately we've kept people so busy saying they have to just go along to survive. We haven't questioned the fact that now we've reached a point where I think it's 300 families basically own half the value of the world. And it's absolutely crazy. We don't need to accept that. And we can choose to do something different. And that choice, whether we choose to make it or not, whether we choose to be aware of it, is at the heart of this thing. And as more people hopefully become aware of it, we will realize we have a lot of power to change the way society works in a way that keeps us safe from the coronavirus, safer from things like this in the future, and that potentially allows us to live in a better world. And I'm not saying what choice to make. I'm saying to recognize that there is a choice and not just look past it and think the way the world was is the way it was supposed to be. Because I will tell you, the world we lived in as of January 2020 was a very messed up world in a lot of ways, where fundamentally a lot of what you were doing was literally going to pay for other people making money. money off your back you never saw, never knew, and they were making it out of thin air. And that was never fair, and we're going to continue going back to that point, because until and unless you understand that, none of the rest of this argument makes sense, and then we go into the old tribal warfare of this side saying take care of the poor and this side take care of the middle, and the poor and the middle keep fighting one another because the rich are busy pulling the strings on each side. And for them it's easy because they have unlimited money, so they go ahead and give money to NPOs, and they give money to all these different organizations and things, and then we're allowed to have certain fights, but fundamentally none of them really threaten the power structure that creates these problems. And why I say that is, as we come out of this, the economy is going to reset, but is it going to reset where we have a greater debt burden or a lesser one? Are we going to have a debt jubilee like I've talked about, or are we going to have a situation where we say, okay, well, you're 90 days behind, and you can pay this debt over the next 10 years? I mean, how is that fair? You're going to be making less money, paying more, but be like, hey, at least it's not the virus anymore. And they're counting on that psychology of saying, well, this is better than that, even if it's not as good as it used to be. And the slow, long-term decay of the West that has been basically where we've been milked to death, pretty much, honestly, in America since the end of World War II, you go forward, we've seen our standard decline post-1950s. We don't have to go for that anymore, and that's something you need to know. But I'm using this example of unemployment to say that we have to get past the stigmas and find a sense of solidarity in terms of what we're going to be able to work on, and that you already see that half the country is being led in a different direction. And I think that if the science is right, and if the basic expectations are right, and we see a second wave, that level of foolishness will be destroyed, sadly at the cost of a lot of people getting really sick who didn't need to, because they listened to stupid ideologues who thought they understood the markets, but they really just knew how to look at the market like an odometer, and they didn't have a deeper understanding of the economics behind this and the control relationships implied. So anyways, let's continue. The resentment will become much more widespread and pernicious. Here again, history is instructive. Even during the Great Depression, a global economic catastrophe that catapulted the U.S. unemployment rate to about 25%, resentment grew as the doldrums persisted. As the sociologists Catherine Newman and Elizabeth Jacobs have noted, critics of the FDR administration excoriated the long-term unemployed as malingerers and reprobates and assaulted New Deal programs as socialist schemes to tax the middle class into poverty. 8 decades later, a Wall Street-led financial contagion pushed the unemployment rate to 10%. This time, the rancor coalesced more quickly, fed by a steady drumbeat of rage from cable, news, talk radio, and eventually the Tea Party. The one sad thing about The Atlantic is it's so blatantly left-leaning that it ends up undercutting its own arguments. There's an argument that can be made that's much stronger I wish they would make, but this is part of the control mechanisms that are out there. Fundamentally, they don't want you to question the system either. I just want to be very clear, but we need to question it, so we'll go through it. But the fact that we shouldn't be shaming the victims of unemployment is absolutely true. All right, during the second phase of the coronavirus recession, America's temporarily strengthened social safety net will revert to its usual bare-bones form. Somehow no money will be available to help the long-term unemployed, even though just 3 years ago Congress found enough money to pay for tax cuts that disproportionately benefited the wealthiest Americans. As their unemployment benefits expire, the jobless and their families will face financial collapse. Public outpourings of compassion and grace will be steadily replaced, as they were in past downturns, with moralizing anger pumped up by partisan media. Swift action from Congress could prevent this coming disaster. First, lawmakers would need to make permanent the temporary upgrades that Congress made to our antiquated unemployment insurance system, which, by the way, you saw isn't working, which raise benefits so that families don't sink rapidly into poverty and extend those benefits to gig workers. But beyond helping the unemployed, Congress must also revamp our regulatory system and safety net to better shield our growing workforce of underemployed workers, and not just low-wage workers, but also the broader group of freelancers, temps, and subcontractors who have few legal protections and tend to be the first who goes when the economy sputters. Severe income inequality means that even employed Americans often live paycheck to paycheck with no savings to get them through the next emergency. A just-in-time economy, it turns out, has no real margin for error. Tying health insurance to unemployment is unusually harmful to workers amid a health crisis that provokes mass joblessness while requiring widespread virus testing and intensive care. If the threats posed by longer-term threats like automation were not reason enough, the present unemployment shock has enhanced the appeal of benefits not linked to work, including a universal basic income. And I'm going to tell you, the UBI is going to come up a lot in this. For those who don't know what UBI is, It's a basic argument that everyone should have a certain floor that they collect in money. Andrew Yang was out there talking about it, that there'd be money out there. And the question is how you sustain people versus the incentives you give them. If you give everyone, let's say, $2,000 a month, does nobody work then? And is that, interestingly enough, it sounds crazy, but from a business perspective, they can automate, they get rid of the employers, the consumption side is kept up in some ways, and that you're just redistributing the wealth around. It's not as crazy as it sounds at first glance, because we like to imagine, well, money doesn't come from nowhere, you have to go work to get it, but the reality is at the top level, money does come from nowhere. That's exactly where it comes from, and that people are looking at this, and the question of how you reorient life is a question we should be having. And the UBI argument is going to come, and it's going to come in this. I almost wonder and wish we would have had a better option. If the Democrats hadn't kneecapped Sanders, we might have actually had this conversation. But unfortunately, you got a banking hack in Joe Biden to go against Trump. So we'll see if some third option emerges here that is interesting. Because as this article concludes, policies that provide only temporary relief are insufficient to protect American workers from all the forces arrayed against them. The structural barriers to securing a decent livelihood in this economy will not suddenly disappear when the vaccine is found. The coronavirus has highlighted vulnerabilities in our current system that will far outlast the pain is unleashed and the solidarity it has instilled, at least for now. And I think that's a good place to end that story, because it really, you're going to see a lot of people who are going to be put into bad positions through no fault of their own, and there's just not much you can do about it. It's going to be the reality of this, and a lot of people are not going to come back, because you're not going to have those service sector jobs. You're not going to have the gig jobs. You're not going to have people having extra money to spend, even if you go back. So consumption's not going to be there, because all the money's going to go either into back bills or debt servicing. And so, and people are already looking at this. Like, I'll give you an example. This is a piece from The Federalist. That's a right-leaning sort of organization. And it was talking about the rent strike that people are talking about. I have a lot of people reach out to me. A lot of people who go, and, look, I hear both sides of it. I actually talk to landlords who say, well, I worked hard to make the money to buy the house, and I need that money to survive. And I get that, but conversely, you grew up in a time, by and large, because they're older people, younger people, were stuck in a position where the costs were prohibitive. The cost of buying a house 50 years ago was very, very different than the cost of buying a house today, and the amount of inflation and cost. And what you have is people fighting. If you want to think of it, it's like a slope people are falling down, and they're trying to plant their flag in the ground so they don't fall further down the mountain, because the mountain that's happening is there's an avalanche of money coming from the top. It's just rolling down and pushing everyone aside, and the further down you are, the more speed that avalanche has, and it crushes you. And so you see these generational conflicts as well as class conflicts shaking out, and the rent strike movement is a big part of it, because the question is, who's going to pay and who pays the debt? And the argument ends up being, well, the landlords owe money too. If you don't pay them, then they can't pay their mortgages, or they owe tax money on the properties. And then you go up a level, and then they say, well, the people who owe that, they have stockholders they're responsible to, so they're at the bottom. But at the end of it, what you find is that some bank owes the debt, or someone ultimately is in threat of taking the property, and they're the ones that are getting money for free. And so what I'm trying to present here is a case that, we look at these rent strikes, and we're already seeing a right-wing sort of argument that these are terrible and these are socialist. But the idea you're asking people to pay with money they don't have is insane. And the way we could restructure our system is if we went to a society that was not so debt-driven, we could have a lot more people be part of an ownership society, be productive industry, productive capital, and not just debt servicing-based capital. But the price is that a whole bunch of people who don't particularly like each other and need to get along would have to get past their momentary grievances of saying, I'm in 858th place versus you who's in 859th, and say, hey, maybe we should work together against people who are existing in a totally different world than us. But we're not there yet, because they make these moral arguments about what should be, never, oddly enough, making those moral arguments about the people at the top, who in fact do worse things at a much higher level. And that's where I'm trying to redirect as a third way of thinking about this, your ire towards is the question of people at the top. But let's read this piece from The Federalist, because I wanted you to see, how this is going. And this just gives you a feel how certain people are attacking this. This piece is by John Daniel Davidson, and it says, rent strikes should be a last resort for jobless tenants, not a tool for social revolution. And he's saying that you can't consider ideology when you're acting in response to a crisis. And on the one hand, I'm sympathetic to that we can't do that. But if it's ideology that caused this crisis, the idea of market first, people last, then maybe we need to ask that question. And I think we should, because I told you in February how we could shut this down and how we could save. I mean, how many American lives are we up to now? Let's just see right now the number. There could be, instead of being 43,000 dead, 40,000 more people probably be alive today if some of the policy prescriptions I had suggested earlier were implemented. It's not just me. There were plenty of other people, but we didn't do it because these things were predictable, because we put certain things above how our survival goes. And that's a question. We absolutely have power to ask these questions, and we should ask these questions because we're not going to get a second chance later. Anyways, one of the understandable results of massive business closures, layoffs, and tens of millions unemployed because the coronavirus pandemic has been that a lot of people can't pay rent. Hence, the rent strike movement now gaining momentum in large cities nationwide. The idea is, instead of just not paying your rent because you got laid off, you organize with other tenants in your building or neighborhood and collectively refuse to pay rent, forcing your landlord to negotiate a rent freeze or some other form of relief. If that's all there were to rent strikes, that'd be understandable. Millions of Americans suddenly stripped of their income through no fault of their own can't be expected to pay rent. And keep in mind that line, because I read this in the order I did for a reason, through no fault of their own. At some point, they're going to say, hey, it's the new world, it sucks, I'm sorry there used to be an architect, used to be an accountant, go Amazon and go move things around, you lazy bum. And that's coming. Don't think it's not coming, because it will be coming. That's why many cities have approved measures like months-long grace periods and moratoriums on eviction and late fees. But this is the problem, right? So they're saying grace periods, right? That means you're going to have to pay it eventually. And what's going to happen when all that debt servicing comes on you like a barrel of bricks? So say you're in New York and say they have a 6-month grace period. Your tenant's going to be, your landlords, some of these landlord organizations, some of them are some nasty people. They're going to go and they're going to come smack down and you say, okay, we want 6 months rent now. You weren't working tough. Not our problem. We'll get someone else in there. And that's the contract that we're having. And this is the social contract of a money-driven system where your value only exists as how you can satisfy debts. Is that how we want society to go forward? It's a question we need to ask. Anyway, the rent strike movement goes a step further, calling on people who haven't lost their jobs to join their fellow out-of-work tenants in solidarity by refusing to pay rent even if they have the means to do so. That's where it goes off the rails. So he's writing a piece defending the system as it is, and he's getting mad that people are looking for a way to get out of that system. If you're working right now, you should be paying rent. Many landlords are in the same position as their tenants, and they don't get rent payments. They can't make mortgage payments. Withholding rent from your landlord when you have the means to pay is the height of irresponsibility and preening entitlement during this crisis. It's the opposite of civic virtue and duty. But here's the question he's not asking, right? The question he should be asking is, why are the landlords having to pay the mortgages? And the answer is because the banks want to keep the market up. Because the biggest thing that the banks put money into, as you'll remember from 2007, 2008, was these mortgage-backed securities, okay? They went back into that market like crazy, and they would lose all their money if it doesn't happen. So you have to go ahead and pay so that the people at the top still benefit. And what you have to ask is, do you want the system that the people at the top are giving you? And that's what today is all about, because he's looking at one little area at the bottom making a moral case, okay? And that's why he's well paid to write for a prestigious magazine, whereas I'm the crazy old guy who lives in the cabin, because I'm saying if you look just a little further up the line, you'll see that the same thing that he's complaining about ultimately ends up happening to all these people, and that's what debt servicing is all about. It's about a way of taking assets from people that continues going forward, and you can look at some really big numbers of how that happens, because it's one thing to say, okay, well, they earned this and they put this forward, and I'm not against earning things by any means. I agree with markets. But what I'm saying is that you're basically working harder and harder to pay for people who are getting the money for free. And we're going to go into detail why I say that, so you can actually see it in their own words. But this guy continues. If you're working right now, you should... Yet that's what the rent strike movement is calling for. One group of more than 150 tenants in Brooklyn, calling themselves the TAF Tenants Association, recently sent a letter to the landlord saying they would withhold rent rather by inability or solidarity for 90 days beginning May 1st. In Queens, an organizer coordinating a strike in 10 buildings with more than 5,000 tenants told Newsweek that rent payments shouldn't be delayed or suspended but dropped altogether, including for tenants who are still working and can afford to pay rent but have joined in solidarity. Flyers and graffiti supporting the rent strike of the movement tend to reflect this ethos of solidarity, calling on all renters to stop paying their landlord, even if you can afford it. No surprise, the movement has attracted support from progressive Democrats. Seattle City Council member Sharma Sawant, a self-described socialist, has been promoting a May 1st rent strike on Twitter as a means to pressure Washington's Democratic establishment to suspend rent and mortgage payments. In Washington, D.C., Rep. Omar has joined the case, tweeting recently under the rent strike hashtag and calling for a federal bailout for renters. Her fellow squad member, Rep. Alexandria Ocasio-Cortez, has also backed a rent strike to pressure New York Governor Andrew Cuomo to cancel rent payments during this pandemic. So, on the one hand, you know what, I would be okay if, and the Federalists would be fine if they said, okay, well, we suppose this, we support all bailouts, but in the same thing, if I go click on other things, they're fine with bailing out the airplanes for $50 billion, but they won't bail you out because, that's productive business. Well, how is it productive business when what you literally had the airline executives doing was they were buying their own stocks back so that they could go ahead and show that the stock prices went up so they got a bigger bonus. So don't think that, people think that the corporations and business world is less corrupt than individuals. Everyone is corrupt, and that's a big part of the thing, and that's because of how we let money work in this thing. And look, I'm not necessarily endorsing individual things, but what I'm saying is I want you to see how this is being made into a partisan case about how you can't help people, because we didn't work to help protect people from rent and mortgages. Instead, we were like, no, this is bad, we're going to get past this, we're going to go fast as possible. So we didn't have sufficient support for unemployed, we didn't get stimulus checks out in time, we haven't protected people from the virus, we do have a discordant policy where people can gather in some places that will get them sick, but not in other places that make people think the whole thing's a joke. And the policy's a joke, even though the virus is not. And now we have the partisanization here of this, of the question of, will we care for our people? Because literally a whole bunch of people have decided that they would be in worse shape than if we tried to care for the people. And I'm sorry, the future in a world that is this virally infected is going to be more collectivist. You don't have to like it. You're welcome to go out there, but the reality is all this is going to do is piss people off, and for a person like this, it's going to create a world that he hates even more than is already out there. I recognize that very early. We are in a new world, and I'm just sharing with you that people are going to go for this, because ultimately, for better or worse, numbers are the game, and what will happen is if one side says, we're going to do this, and the other side says, well, we're going to make you do that, the side that's going to offer you the more gives will survive, and that's what's going to happen, and it's not unreasonable in this situation, but it does require us to rethink a lot of things, and we're not allowed to have that conversation because we're too busy yelling how bad each other are. Anyways, of course, along with rent strikes, Cortez also wants to drop the Medicare age to 0 and pass universal single payer. In one live stream forum in the recently passed coronavirus relief bill, Cortez called for rent suspension and railed against our brutal barbarian society while making a margarita. The idea that you personalize and partisanize these questions are important. But, to think of it this way, if people had access to a better health system, you would not have certain problems. And the fact that we've caught our health with our employers does make it really hard for America to deal with this. And I think it's at the heart of why we've had a lot of problems. But anyway, so we'll continue with his screed because I want you to see what it sounds like. Rent strikes are about more than just rent, but like many leftist causes, the rent strike movement doesn't really account for how the economy works. It might be easy to villainize landlords when so many people are out of work, but the truth is, in many cases, landlords are out of work too. Often they're just regular people who have a rental property or two as part of their income stream. If they start getting rent payments, they won't be able to pay their mortgages, the banks will foreclose on their properties, the tenants will be forced out, rent strike or no. Again, that's why if you can pay your rent, pay it. Now more than ever, you have an obligation to do so. Figure out some other way to help your fellow tenants who are out of work, but don't punish your landlord for a crisis he or she didn't create. Of course, if you get enough people to stop paying rent and trigger mass foreclosures, maybe it will trigger a housing crisis and an economic collapse, and it will. That's what hardcore socialists really want. They just don't want to broadcast it. Peruse rent strike on Twitter and you'll see a pattern to the rhetoric. Like other big leftist causes, say the Green New Deal, the rent strike movement is only nominally about helping out jobless tenants. The real goal is fundamental transformation of the U.S. economy. So maybe don't help them out with that and just pay your rent if you can. We're all in this together, even the landlords. And so the question is, what are we in together? Because this guy obviously isn't in anything together, except he wants to go ahead and say, we'll help the landlords because you want to ultimately, you got to help the banks. And the question is, you either got to help the banks or you got to help the people. That's what this choice really comes down to. And if you don't choose to help the people break the system, you're going to help the banks. And I know that's a big phrase for me to say, break the system. But ultimately, all of this suffering is about debt. It's not about ownership. It's not about moral crises. Imagine a world in which, let's say this got really bad and half of our people died. Everyone could own a house easily because half the houses would be empty. Everyone could be free of debts because they'd say that's the old world. It doesn't matter anymore. What is lacking here continues to be a lack of imagination about how we handle our issues with debt and contracts. And the fact is that a lot of contracts are built upon the presumptions, they put indemnity clauses, acts of God clause. This is an act of God, okay? What's happened at this point, and we could reset, and we could all come out without debt, and we could all come out with a property, and we could all go to a system where then we say, okay, everyone's made whole, everyone gets a restart, everyone gets a little bit of help, and then you'd have an economy that, frankly, even from a capitalist perspective, would be much better and much more lively because you'd have real consumption, you'd have people who were safe, and all this money wouldn't be caught up in debt servicing, but it would threaten the power structures of the system, and it would be a different world. But it's either that world or we go to a poorer version of the world we knew before that's even dingier, more in debt. And the question is, what are you going to do about making those choices? And if you don't make any choices and you just say, dear Lord, let me go back to work, let me go back, I don't want to go back like this anymore, you're going to end up in a situation where you're going to make a few people very rich and a whole lot of people very poor. And with the cost and how technology is going forward and automation, we might become the surplus. You saw at the beginning of this process how ready they were to have us die to go ahead and keep this economy going. For those of you who've been with this program for a while, going back to February and March, when this was just starting, I was pointing out step by step by step how they could have done other things. And they didn't, and neither side did it either, to be honest with you. The institutional Democrats and Republicans in D.C. all put the market first. They put these big entities first. And I'm not attacking the people at the state level. I think it's healthy that things are devolving to the state level because ultimately we are going to have to begin to push back against this if we want to have any hope for a better future to come out of this. I mean, we've made terrible decisions and terrible choices where we can't sustain the old way. And what I'm submitting to you is a simple argument. We shouldn't go back to the world that didn't work for most of us. And that's fine if some people don't agree, but I want you to understand the argument. And if you don't want to listen, well, that's fine, because I've reached the point where we're now past the point of me just telling you how to survive the coronavirus. If you're staying home and you're being safe and you have food, that's the best you can do right now. That's easy. What I'm trying to figure out now is how we come out to a society that isn't a whole train wreck at the other side of this. And it turns out it's quite difficult because there's a lot of bad actors who are acting to advance just their interests. And that alone doesn't make them bad actors, but the fact of how they sort of control things works. And I want to talk about from that perspective, because one of the things that came up in one of these articles, I think it was the Atlantic piece, is they were talking about mom and pop businesses and how they're not going to survive, because they're the ones who are going to get the least bailouts. They're going to be the ones who get the smallest loans. They're going to be the ones who are being held to pay because they're not huge contractual arrangements. And they needed a lot of help. So I want to read this piece just to show you, the sort of people we're trying to sustain with this wonderful bank system we have here. And this is from the USA Today. This was posted by Dalvin Brown, and this was yesterday at 8:41 a.m. Chase and other banks shuffled the Paycheck Protection Program small business applications, the lawsuits say. And I'm going to just use this as an example. There was a lot of money that was supposed to go to small businesses to go help them through the SBA and the CARES Act. And they said, okay, go to the big banks who are getting this money for free, and you can go out there and you can get loans from them. Remember, they get money for free. You're paying them for the loans. That's the first thing. Okay, keep that in mind. But we're going to do this, and then you can be made whole. So a lot of small businesses would do this, and they were told they could keep their employees. But what happened was they couldn't actually get in there. They say, well, you never had a loan before because you were financially responsible and you couldn't do it. There was a big stink about Bank of America with that. And there's other examples we can go through, including this one that's from Chase, which is one of the biggest ones, J.P. Morgan Chase. So the article reads, Chase and other banks shuffled Paycheck Protection Program small business applications, the lawsuit says. 2 companies in California filed a class action lawsuit against J.P. Morgan Chase alleging unfair business practices towards some small businesses that applied for coronavirus-related loans under the government's paycheck program. In the suit filed on Sunday, a cybersecurity firm and event planning company accused Chase Bank of prioritizing small business borrowers who were seeking larger loan amounts rather than processing the government-sponsored loan applications on a first-come, first-served basis as advertising. The move meant that Chase and other banks would collect larger processing fees, nearly $6 billion in total, by front-loading the queue of businesses seeking higher loans, according to the lawsuit, right? So Chase is keeping themselves afloat by taking on more and more debt that they're charging others. That's what they're doing, and they're screwing over the small businesses, the mom and pops, so that people don't even get a chance. And they used up the SBA money that way so they could get a bigger fee. The businesses were seeking lower loans. Were deprioritized, so many didn't get the aid they were entitled to. The lawsuit filed on behalf of small businesses said. The legal action is one in a series of lawsuits lodged by small businesses against big banks such as Wells Fargo, Bank of America, and Bancorp, citing unfair business practices and false advertising. The loans were part of a $349 billion emergency small business lending program meant to keep businesses afloat and staffers employed in the wake of the coronavirus epidemic. The government-backed Forgivable Loan Program kicked off on April 3rd and ran out of money less than 2 weeks later on April 16th. Chase concealed from the public it was reshuffling the PPP applications and if received and prioritizing the applications that would make the bank the most money, the lawsuit says. These are your people who were supposed to be working to endorse, right? Chase Bank wasn't immediately available for comment. Chase updated a statement to small business customers on its website April 19th, the day the lawsuit in California is filed. I also understand that many of you are frustrated you applied early in the process, but SBA funding ran out before you could receive a loan, said Jennifer Roberts, CEO of Chase Business Banking. We want you to know that we are working to make sure as many of our business banking customers receive loans as possible. Right, so what did they do? They helped the big at the expense of the small. I want you to see that because you're going to see this pattern happens over and over again. And if the small businesses now close up, well, hey, at least you have the big ones and you can go work for, Walmart or Amazon or whatever. Okay, 80% of, 80% of PPP loans processed through Chase went to businesses with less than $5 million in revenue. About half went to small businesses with less than $100,000, the bank said. The proof of Chase prioritizing larger borrowers lies in numbers provided by the Small Business Administration, the lawsuit alleges. In the past 3 days before the PPP loan money ran out, banks allegedly processed loan applications for $150,000 and under at twice the rate of larger loans. This would suggest that banks prioritized applications for the largest loans early on. Otherwise, the percentage change of applications submitted in the last 3 days of the program would be consistent among all application types, the plaintiffs claim. And that's a reasonable argument, actually, that they probably did go ahead and take the big chunks of money first because they were racing to get there. And this is what we're ending up with. When you deal with a debt-based economy, things end up being zero-sum games because you're dealing with a mechanism of control. And this is why I try really hard in this program to make you understand the difference between finance and economics. Economics is the science of behavior by which means people get goods and services and trade and transact them to create growth. Finance is the means by which you graft onto a system of economics means to make money from other money, where what you do is you take currency and you basically trade off the velocity and transactions of it to create fake money from existing money. And if you start to study it, there's things like M2, M3, and all these have to do with money that's illiquid, but that fundamentally makes a lot of money. And hedge funds, basically 20% of the American economy, and the wealthiest 20% by far, is caught up in how these games work. And what I'm suggesting to you is we can choose to go away from these games, or we could do something where we see like what happened with Chase here. And this is what's happening. And I want you to see it's part of a larger pattern. I just picked Chase. I could pick Bank of America, I could pick Wells Fargo, I could pick any of these things. But what is actually happening is something where you are seeing that there is a fight to control the future, and one hand of it is the Federal Reserve and its ownership of everything, which is a neo-feudal society, and not even a good feudal society. I was a Middle Ages guy. It's literally like imagining that you are being run by, if you watch Game of Thrones, the Iron Bank. Literally, that's where America's heading towards if we go along, or we have to do something different. So I want you to know what the bank's doing. So this piece is by from April 20th, and this is by Clem Chambers of Intelligent Investing. It's on Forbes. The crash of 2020, QE, that's quantitative easing, and the Federal Reserve's market corner. So he's explaining why the stock market keeps going up. Let's hear this piece. Why has the stock market rallied so strongly? Here's why. The stock market's rise is a consequence of the Federal Reserve's huge inflation of its balance sheet. And they show here that the Federal Reserve has increased the number of assets it owns from about 1 million in 2009 in the last crisis to well over 6 million and advancing rapidly right now. So they're showing this, and it says with the caption, the Federal Reserve's balance sheet is now truly astronomical. A lot of commentators have been mind-boggled by the Federal Reserve now that discombobulation has reached new heights. The Federal Reserve balance sheet is truly astronomical and hard to conceive in unconcrete terms. Let's call it $1,000 for every human alive on Earth. As a side issue, this is the first time I've seen an axis expressed in millions of millions. These are times of watershed. So literally what they're saying is they have 6 million of millions of assets. So 1 million times 1 million, just so you know, is 1 trillion. So they're saying that the Federal Reserve went from holding about $1 trillion in assets, just to put this in context, to now holding $6 trillion worth of assets. Now, so that you understand, that is now, and it's still growing, they now own the equivalent of about a third, maybe a little less than that. Let's call it between 25% and 30% of the productive value of the American economy is now in Fed hands because they are the shareholders on this. So you may have seen the stories we did on BlackRock and other things. They continue pumping into this, and they are now literally buying the whole economy during this crisis, okay? And what someone might say generously that that's what's needed because they're the buyer of last resort, but the problem is this is not a disinterested entity. This is a private entity owned by the banks for the banks, and it has been the root of actually a lot of the struggles in American history. So they now own a big chunk of what the economy is. So let's continue. Okay. As a side issue, these are times of watershed. This balance sheet expansion is the sole cause of the bounce in the stock market, but whether it will make a bounce in economic activity when the lockdowns end is yet to be seen. Likely, it will only be part of the prevention of an acute and vicious meltdown of the U.S. economy. And so let's talk about that for 1 second. What they're saying is the Fed basically has agreed to buy everything, betting that we can get it back. But to get it back, you're going to have to pay them for the service. You're going to have to pay on that $6 trillion in assets all along the whole system. And they're willing to take that chance, and they want us to get back now because now they have put in their money. They've gotten what they want. There are assets they don't want. And the question is, do you go back? If you don't go back, the system crashes, and that's terrible, but all that debt disappears. So we could talk about the 24 trillion America owes. You can talk about the 80 millions if you start to bring in unfunded liabilities. If you look at the global derivatives market, some other people do, they say there's upwards of $300 trillion, and all this debt is owed, and someone has to pay it, and it's all on computers in ones and zeros, and that's where your money, that's why things get more expensive. All that money is just being created out of thin air. It's why you have two parents working where one used to. We could do that, but this is what's really happening. This is, if you want the conspiracy to look at, it's right in plain sight. It's that a few people are going to own everything. Go watch Trading Spaces if you've never seen that, the old movie with Eddie Murphy and Dan Aykroyd. You'll be able to see this is what's happening. And whether through intent or accident, we've ended up in a spot where basically for us to come out the other side, we have to go ahead and give a whole bunch more power to people who were already being maligned and who's actually, really, if you want to pick who was responsible, the market going out there and screaming that we need to do this, And Mnuchin found billions for them. But he said, I think people can make it 10 weeks on $1,200. I mean, what world is he living in? You can't even make it to the grocery store for that amount of time for that money. So, but who knows? This is what we're being told. In any case, the first spike on this curve is the initial intervention in the global financial crisis, the so-called Great Recession credit crunch. This time, however, while the cure is the same, the disease is different. If I sneak into your house, find your stash of cash, and burn it in the stove, you would and the world has less money. In the UK, you used to be able to fish out the metal strips, take it to the central bank, and it would replace your cash for free. The money is resurrected. This is what the Federal Reserve and other central banks did back then. Money got vaporized by a financial crisis. The Federal Reserve stepped in and backstopped the value of assets and thereby prevented the destruction of oceans of money. It makes sense to do it in those cases, and it works. This time, no one has destroyed money because of a malfunction in the financial system. This time, people have been incarcerated and forced not to produce or consume. Rather than burning your pile of dollar bills, it is akin to locking you in your basement on hardtack rations and then vandalizing your vegetable patch. The lost work and consumption cannot be replaced or substituted. The assets that would have been created from the investment that was made have been destroyed and the investment lost. Even if you get an insurance payment, it's not a like for like. The best that can be done to remedy the situation is to bridge the situation over the period necessary to get back to normality. This is where we are now. Can the market go up if the Fed stops inflating its balance sheet? That doesn't seem likely. Can the market stay afloat when the Federal Reserve stops? Possibly, but it doesn't seem that likely. The Federal Reserve simply can't keep growing its balance sheet forever. It must stop at some point. Otherwise, it will nationalize the assets of America. And there you have it. But nationalizing the assets of America means that one group of people will own everything. That is the game we're looking at. And if you look, authoritarian systems are the ones who are emerging from this. America's going to have an authority, but people will tell you it's the U.S. Treasury. That's not the truth. The truth is it's the federal banks, and they've been the one pushing this for a very long time. And as this guy recommends, he even says, worse things than that could happen, but the core problem is we know these liquidity actions are not the solution to the underlying problem, as opposed to 2008 when they were actually the cure. The Federal Reserve is delivering palliative care. This liquidity is a painkiller, not a cure. This calls on an ugly analogy from the days of Spanish flu for what could happen in this situation. Aspirin, the newly invented painkiller, was recommended by the U.S. Surgeon General to the Army in high doses as a cure for Spanish flu pandemic, and recommended dose level led to many deaths from overdose. This is the sort of outcome risked here. And he continues, luckily, the Federal Reserve is very, very smart. It will stop growing its balance sheet, but when it does, the market will start levitating, I believe. It must then fall, but the Fed will try to keep it trading sidewise. I do not think it will succeed, but it might. It will be a battle, and we will be able to judge how it is going as the months pass. So what it comes down to is the bank is trying to save itself, and this is what they're literally saying is the U.S. economy. I want you to understand, this is what the government cares about. This is what the Treasury Department cares about. This is where the money's going. This is the fight, and what they want to do is manage to keep this afloat enough so that you come back and pay for all the debts they've accrued, and they're putting in this here. The trick in the aftermath of the pandemic will be spotting opportunities and getting the timing right. This will be horribly difficult. It will be the core challenge now for a very long time because the trend is no longer our friend, but getting back out there and getting busy will be our best contribution to the recovery most of us can make. And so the question is, and I present to each and every one of you, do you want to go back out there? Do you want to rush to go out there to go ahead and help these people? Because they're counting on you. They are counting on you, and they're counting on us, because I figure if we go ahead and we're smart and we're safe and we wait the two months, let's say, which before, a second wave comes out, and we don't go rush into this and we wait and see what the long-term consequence is, we're not going to starve to death. We're not going to be bankrupted. They're not going to throw millions of people out of their houses. But you know what might happen? You might see all that shell game the Fed's been playing disappear. And if that ends up happening, is that good or bad for human history? Well, I guess it depends. How do you think about interest, lending, and debt? And if you think that that's something that could be better, then maybe it's something you would want to consider. And I would present to you, I think that that's maybe not a bad way to look at this, because I want to show you, and we're going to go to another piece here. This is from, this is a couple days older. This is from Monday, April 13th, and it's by Jeff Cox. Here is everything the Fed has done to save the economy. So I want to read to you the key points. And I want to say, though, they're saying the Fed did this to save the economy, and they present them as the heroic figures rushing from above. But let's just go ahead and talk about what each of these things are. And this is in CNBC, very reputable site, covers business. And I want you to see all the ways in which they are getting through this. So you can't get your unemployment check. You're hoping to get your stimulus check. You might not be able to sign up. Food prices are going up. Food scarcity is becoming an issue. And, we have these fights between people at the bottom, but what's happening at the top? So, key points. The Federal Reserve has taken unprecedented actions to save the economy during the coronavirus crisis. There have been rate cuts and a slew of credit and lending programs that could inject more than $6 trillion into the economy. Congress has passed $2 trillion in rescue efforts, but continues to squabble over how much more should be allocated and how it should be distributed. President Trump has ceased his consistent criticism of the central bank. On Thursday, April 9th, the market learned the economy was even worse than most had thought, as the Labor Department reported another 6.6 million Americans had just joined the ranks of the jobless. That meant in just a 3-week period, more than 16 million Americans, or 10% of the workforce, had been sent to the unemployment line. Keep in mind, we've added another 5.2 million plus. To the naked eye, it looked like the U.S. economy was in free fall, with no hope of avoiding a downturn that would rival the Great Depression. The Federal Reserve, though, had other ideas. And literally the same minute the government released the jobless claims data, the Fed had an announcement of its own, a series of programs aimed at big and smaller businesses alike, as well as households and governments, represented in an unprecedented $2.3 trillion in economic stimulus. The programs were far and away bigger than anything the central bank attempted during the financial crisis, and were announced in much less time than the 2008-2009 efforts. The move also put a capstone on a dizzying laundry list of initiatives. The actions began with an emergency interest rate cut and continued through an alphabet soup of credit facilities aimed at keeping money flowing through the financial system to businesses, households, municipal and state governing bodies bereft of revenue as the American economy has been sidelined. None of us has the luxury of choosing our challenges. Fate and history provide them for us, Fed Chairman Jerome Powell said in remarks that accompanied Thursday's rollout. Our job is to meet the test we are presented. So the Fed acts as Congress argues, right? So the Fed has acted while Congress has continued to squabble over its own stimulus, what else is needed, and how it should be distributed. While legislators did pass rescue measures worth more than $2 trillion, the need for more is apparent. Rival parties haven't been able to agree on adding just $250 billion in help and adjourned for the weekend as small businesses continue to struggle and unemployment rolls climb. For its part, here's a look at the action the Fed has taken in the past 6 weeks. And so look at the narrative here. Banks, good, big, helping, doing things. Congress, responsibility, bad. And to be honest, both parties have done an absolutely shoddy job dealing with this. And they both deserve to be punished, but they don't deserve to be punished to the extent that these people come out on top. And I want you to show. So March 3rd, an emergency 0.5 interest rate cut. March 15th, and another 1% percentage point rate cut, taking the Fed's benchmark for short-term lending down to near zero, okay? So basically what they were doing is they lowered the cut so you would not have to, they get money for free. The central bank prints money, that's quantitative easing is, and they give it to banks for free. And we'll add this second point. March 15th, at the same time as the second rate cut, the Fed lowered the rate for banks to borrow at the discount window by 1.5 percentage points and cut the reserve requirement ratio for banks to zero. So what is a reserve requirement? That says if you're a bank, you have to have a certain amount of money so that you can cover any expenses. So if you had a reserve requirement of, let's say, 10%, which is what they used to have, that if you had $1,000 in your bank, you could loan out 10 loans for $1,000, charge interest on each and every one of them, making that interest, let's just say it's 10%, so you make $1,000 between all of them. You're making $100 on each loan, at the same time that you're only holding $1,000. That's called M2. That's how you make money out of thin air, and that's what banks do. And what the Fed said as of March 15th was that any bank could get as much money as they want so long as they could keep it moving in the system. So now we're all playing with monopoly money. I want you to understand that, except the difference is they're getting their monopoly money right from the bank, and you're having to pay rent on Park Place and Boardwalk along the way. Okay, March 17th. In the first of a slew of measures aimed at keeping credit flowing through the system, in the financial system, the Fed said it would start buying commercial paper or the short-term unsecured debt that businesses rely upon for operational cash. So basically what happened was that in order to keep the system going, the Fed said they're going to buy up debt that has no inherent value, and they're just going to do it because they want to keep the corporations going. So short-term unsecured debt, that means debt without collateral. They went ahead and did that because, hey, we're here to help the businesses, okay? So all of that money comes in there. It makes the money in your wallet, your checking account, worth a lot less. So March 18th, another facility providing credit to keep money markets functioning properly. March 19th, a new operation focused on currency swaps aimed at other institutions in need of dollar-denominated assets. And don't kid yourself, that's them helping buy out international banks. March 20th, an operation headed by the Boston Fed to buy municipal debt. So now we see the central banks are literally buying towns. They're going to be the ones who the towns own things to. If you think the towns aren't going to listen to the bank, then you haven't studied history. Look at how the city of London works as an example. So now we have the Fed buying literally aspects of ownership of our towns, okay? That's what municipal debt is. I mean, debt has no value unless it has ownership, and while you don't directly own the town, believe me, there's a lot of influence that comes in there. March 23rd, an expansion of the Fed's originally announced asset purchases, which were supposed to max out at $700 billion, but now are unlimited depending on the need to support markets and the economy. The purchases have already expanded the Fed's holding on its balance sheet by more than $2 trillion. So the Federal Reserve is buying blue chip assets on the cheap when the thing went down, and no one can buy it because they don't have money, because there's nothing really going on. But as the market goes down, the Fed is artificially keeping the numbers up, but they're getting all these assets at a huge discount with money that they're making out of thin air. And they're saying, hey, aren't you proud of us for saving the economy? We're keeping all your favorite businesses afloat. Well, that's not really true. What they're doing is they're basically providing a legal fiction that creates a lot of money so that we all have money that's worth less. They have ownership of these organizations. The organizations can continue, but what you see is the consolidation through debt of ownership into very, very few hands. And that's what's happening to the tune of trillions of dollars. The Fed is literally creating out of thin air. They've already, with $6 trillion, created a third of all the wealth Americans would produce basically in a year, and probably less than that this year, given all the things that are out there, to go ahead and take ownership. And the government's letting them. The government wants to let this happen, and no one's even complaining about this because we're busy worried about how someone can pay, $1,000 in rent and how they're the bad guy in this deal, even though you literally have trillions of dollars being made out of thin air. And we're just talking at level one, the money being dumped to the banks. We're not talking about the fact that if you have $6 trillion, let's just say you put $1 trillion of it into banking, and they're offering loans on this, on whatever terms they want, which, just for money without assets, I mean, there's no risk to the banks, really. There's no downside, and they're making interest on it. And this is how the deal works. We're caught up in debt and consumption. It's crazy, but that's how it actually works. All right, let's see what else we got. March 23rd, in addition to the next leg of quantitative easing, i.e. inflation, the Fed also announced a $300 billion credit program for businesses and consumers. The initiatives include 2 credit facilities for large employers, an expanded term asset bank loan facility for businesses and consumers through the Small Business Administration, an expanded money market facility that includes municipal debt and certificates of deposit. They're saying, yeah, we're going to buy everything. That's what that means. Different forms of debt that they've never bought. April 6th, an announcement: the Fed will provide support to the Treasury Payment Protection Program, incentivizing businesses not to lay off employees during the coronavirus-induced shutdown. Of course, they bought all the businesses. Now they want to go ahead and now they are going to give loans to the Treasury, which you're going to end up paying for with tax dollars. That support will ultimately end up going ahead keeping the businesses afloat long enough because they want to get back to work now that they got their assets. And this is what the CARES Act did. It gave them a lot of ability, and the Trump administration basically gave them a rubber stamp because the Trump administration desperately wanted 0% interest so they could spend a whole bunch of money at the government level. But what we're doing is we're destroying the value of the dollar. And if you think the fact that the oil price is down near zero has nothing to do with this, then you don't understand what the dollar is really about. It's a petrodollar whose value is caught up in the oil, and literally we are at the risk of a dollar collapse. I mean, I know that sounds harsh right now, but it's honestly going to make sense in a little bit of time because it has no value. It's been inflated into oblivion, and the one thing it used to do probably are going to be something that other countries are going to move away from, because either America's going to have to stay out there and play geopolitics and maybe watch Iran go to war with Saudi Arabia or something, or who knows what China's planning, or we're going to have to come home and take care of our finances, in which case those things happen anyway, and you see the OPEC cartel begin to crumble. That's the asymmetrical war aspect of this that you have to look at. So, April 8th, a modification for the asset restriction is placed on scandal-plagued Wells Fargo to allow the third biggest U.S. bank to participate in the business lending programs. So, as usual, they don't get punished. They're getting free money, too. Don't even question it, all right? Because, hey, everyone needs to be taken care of, and the banks know how to do it, right? April 9th. The coup de grace, a $2.3 trillion lending program that will extend credit to banks that issue PPP loans, purchase up to $600 billion in loans issued through the Main Street program to medium-sized firms. The moves also involve secondary corporate credit facilities that will allow the Fed to buy corporate bonds from, quote, fallen angels that have slid into downgrades, and a $500 billion program to buy bonds from the state and municipal governments. So let's talk about those fallen angels, right? The fallen angels are companies that were rated AAA assets that ended up, because of the coronavirus shutdown, being not worth as much. So now the Fed is buying stocks too. So they're going to own, they're going to own the Treasury debt, they're going to own the small business debt, the large business debt, the municipal debt, and all of these different actions. Of course these people want to get back to work. Why wouldn't they? Because ultimately they are the ones who are going to be the ones who have a lot of this value. And they're there. And the idea is that they're a disinterested actor. No, they're not. They're an entity that was grafted on to the United States, but frankly in violation of the Constitution through a terrible act. And go read The Creature from Jekyll Island if you don't understand that. So if this is what you're working to put back in power. I want you to understand that, because they say there's no money out there, there's no support. I'm showing you where trillions of dollars are. I mean, you want to figure out what $6 trillion are? If we had taken that $6 trillion in assets, right, and we go ahead, let's see, 6 trillion. So I'm just trying to figure out how to do this. Let's be 600 or 6,000 billions, 6 million millions divided by 330 million people is the number we've been using. We could have given every American $18,000. That would have kept you whole. That would have paid for the rent for pretty much everyone for a little while, and just say we're going to reopen it, but we didn't do that. And we purposely didn't do that because then there's no gain in that. There's no winner and loser if the people are made whole. And I want you to see that choices were made. And you're being told, oh, they didn't have any choices. The hell they didn't. They could have had Congress sit down and they could have said, we're going to go ahead and take care of the people, and we're going to allow the businesses to keep going that way, and we could have done a debt forgiveness structure. But they didn't, because what it is it's a small group of people working for a small group of people trying to keep control. And that's the system which I'm arguing that we should go ahead and question. And whether you want to support it or not, that's fine, but you should understand this is what really happened. In all, the programs could contribute to, combine to provide more than $6 trillion of liquidity to the financial and business system. Almost since he appointed him, President Trump has berated Powell for not moving quickly enough. However, if Trump would have had his way, the Fed would have already been at or near zero with rates, leaving with less maneuverability during the present crisis. Trump has said little about the Fed's moves thus far, but his at times harsh berating of Powell has subsided. Powell repeatedly has rejected the notion the Fed takes political considerations into account. Instead, he said officials are key to making sure the steep economic downturn is as short as possible. Our main focus is on the near term, he said. My guess is the behavior will change. It won't change quickly. People will start to go back to the movies, to the theaters. They'll start to travel, and they'll gain confidence it's okay to do so. That process will certainly be gradual and tentative. And here's the question. This is what it comes down to for us all. If we go back to the old way of living and we take on these horrible chances, that what ends up happening is that fundamentally their bet pays off, and that we will be a poorer nation, that except for a few people who will come out very good, and it will look a lot like 2008. And you know, whether it was the Bush administration, Obama, or Trump, have you noticed how the same people always seem to win and the same people seem to lose? But yet there is a counter side to this, which is if we as people go ahead and say, hey, we're going to put health ahead of things, and not just the health of the virus, but the financial health of people that aren't paying their whole lives into debt. You know, in early America, this was a problem. Think of James Oglethorpe in Georgia. Think of the shareholders who basically had to pledge indentured servitude for a time to make it through. That's the America we are coming towards making. And if we want to go ahead and do that, then we rush back to work. If we don't, then we need to go ahead and demand a new social contract about how we're going to work on this, because otherwise, all that's going to happen, let's say you go back, and let's say you take the argument, I can't take the risk. It sounds nice, Tom, but you know, my world's out there. You're going to be working harder to make less, and that's where you're going to end up with the return of inflation, where the cost is too expensive because ultimately all this money's caught up in debt servicing. And I want to share this piece with you from The Economist here. It's the next to last piece in today's program. And this is in finance and economics, and this is just coverage. Let's see the name of the author here. They just didn't write the author's name at the top. Let me see if it's the bottom here. Sometimes they do that on their website. They did not, so we'll just have to read it. But this is from The Economist. COVID could lead to the return of inflation eventually. Once the virus is truly beaten, the crisis could weaken structural forces weighing on demand. So what are they saying of inflation? They're saying basically when you have more money than its ability to purchase, its purchasing power goes down. That's currency inflation. Or economic inflation is where you have an unbalanced economy, where you produce too much of one thing and it loses its value. So this is kind of a mainstream coverage piece, but I want to just give you a feel for it, and I'm going to annotate it heavily to make it more useful. Okay. Inflation in the rich world resembles a fairy tale beast. Older members of society frighten younger ones with stories of the creature's foul deeds. but few serious people expect to see one, and some doubt it ever existed. Although high inflation seemed a fixture of the economic landscape in the 70s, and just so you know why that happened, that's when we went off the gold standard. That's why debt became decoupled from actual production, and why the cost of things went through the roof. That was what caused that. Changes to policy and the structure of the global economy since have ushered in 4 decades of ever meeker growth in prices. As COVID-19 shutters businesses and leaves supermarket shelves bare, some economists fret the pandemic could lead to inflation making an unwelcome return. Though the future is shrouded in more uncertainty than ever, the inflation seems unlikely to rear its head until perhaps the world's struggle with COVID nears its end. Worries about soaring prices start with the observation that virus-fighting measures choke off production. Crudely put, inflation is the result of too much money chasing too few goods. And so I think that's well put, actually. And remember, we've seen $6 trillion created by the Fed, or let's say the equivalent of a third of a year's production in the United States in the course of about 2 months, okay? At present, the amount of goods and services available for purchase is tumbling. Many service industries are shut down. The virus is playing havoc with the supply of some products. On April 12th, Smithfield Foods, a meat processing firm, said it would close a plant producing nearly 5% of American pork after more than 200 workers fell ill. It has since shut down others. Workers involved in the logistics operations for e-commerce platforms such as Amazon and Instacart have gone on strike to demand higher pay and safer working conditions. If supply interruptions translate into shortages and stops, then higher prices could follow. And if this goes on for about, 6 to 8 weeks, you're going to see that. Okay, massive stimulus programs are another potential source of inflation. Governments around the world are borrowing heavily to finance schemes that support firms and workers. Central banks are flooding economies with newly created money. Over the past month, the balance sheet of the European Central Bank has grown by nearly $600 billion, or nearly 12%, and that of the Federal Reserve by nearly $2 trillion, more than 40%. And we show that that's only a third of what they're doing, and I don't even know what else the Central Bank in Europe is doing. Printing money during the global financial crisis did not spark rapid inflation, yet its coincidence with a collapse in supply might lead you to expect rocketing prices, and that's possible. The prices of some goods and services might indeed rise sharply while economies are locked down. Those for some medical equipment in America, for instance, have reportedly risen as state governments compete for scarce supply. But the broad sustained prices increases in price levels associated with accelerating inflation are unlikely to materialize in the short run because lockdowns both interrupt supply and undercut workers' ability to earn and to spend. Closing a restaurant limits food service supply, but it also means stacked waiters and kitchen staff have no income. And in some circumstances, the drop in demand induced by a supply shock may be larger than the decline in supply, a source of deflationary rather than inflationary pressure. And so you understand what deflation and inflation is. Deflation means that you have an economy, right, that literally has more demand than its ability to meet needs, and so you see a price collapse happen because nobody wants to buy. For example, cars are a good example of a deflationary economy right now. Nobody's going anywhere, so nobody's going to buy cars, right? I mean, not many people. And therefore, you're going to see sticker prices have to go down. Theoretically, either that or cars won't move, and then you'll have a credit crunch, and you'll have all these problems because consumption behaviors won't happen. And that's why I've sometimes said we have a deflationary economy. At the same time, we have an inflationary currency. And this goes to the heart of what I've been talking about with each of you, this dichotomy between the finance that has to be constantly consumption, constantly inflating, constantly debt. It has to have high velocity because if it stops, then it's like juggling things. When you juggle something fast enough, it looks like a solid thing. Like if you have an object, I'll give you an example. Fan's a perfect example. If you have a fan on a high speed, it can look like a single blade sometimes, not in motion, because it's moving very fast. But as you slow it down more and more, you see that those blades are in fact separated and that they are individual. In the same way, that's sort of how our economy works. If we're not worrying at a certain level, if that velocity of money doesn't continue, then you end up having a problem where the money itself, it becomes obvious it doesn't have the value that it needs to have, and that the credit stops, and the whole system, which is caught up on these complicated fictions, falls apart and you have a true deflation where you have the economy isn't going forward, right? That you have the economy of goods and services isn't happening, but you have the currency coming out faster and faster and faster that literally we're saying just watch the hand, watch the thing spin, and the reality is it's disconnected. And that disconnect should tell you that fundamentally that the finance system is separate from the economic system. And my argument isn't to destroy the economy. My argument is that do you want this finance system to be out there controlling things? Anyway, let's continue the story. It's an interesting one. This idea is explored in a new working paper by Veronica Guerrieri of the University of Chicago, Guido Lorenzoni of Northwestern University, Ludwig Straub of Harvard University, and Ivan Verning of the Massachusetts Institute of Technology. If some sectors of the economy shut down entirely, affected workers will curtail their spending dramatically. Spending by other workers could only make up for the shortfall, only if the goods and services that can still be produced are substitutes for those that cannot. The abrupt drop in consumer spending on plane tickets or hotel bookings is unlikely to be offset by more purchases of teleworking software instead, for instance. In the absence of good substitutes, say the authors, the economy experiences a Keynesian supply shock where the demand falls by more than by supply. They provide another useful way to think about this state of the world. The consumption will be much more valuable in the future as goods that cannot be had today become available once more. So it makes sense to spend less now and more later. Available figures suggest that fewer goods are indeed being chased by even less spending. In March, annual consumer price inflation slowed in both America and the euro area, combined with rates in February. Much of that reflected tumbling energy costs, but core inflation, which strips out food and energy prices. And by the way, this is one of the games, that this term of core inflation, which they don't consider food and energy prices, that's how they hide how much inflation happens, because food should be included in that inflation cost because everyone needs food and everyone needs energy. And they say inflation doesn't include that. That's a load of crap, but that's something they've done for a long time. Also decelerated. Financial market measures of inflation expectations suggest the drop is not a one-off. Expectations for annual inflation in America over the next decade, as calculated by the Federal Reserve Bank of Cleveland, sank from 1.7% in January to 1.2% in April. So they're saying they expect the economy to grow less. That's what that means. Those expectations could shift as economies reopen. Rehired workers could spend a high share of their income. Demand from earners whose incomes are unaffected by shutdowns could overwhelm slowly recovering supply. Disinflationary pressures will remain, though. Across rich economies, services account for half or more of the consumption baskets used to calculate consumer price inflation. For as long as fears of viral contagion linger, many businesses could struggle to attract new customers and be forced to offer steep discounts. Technologies adopted during lockdowns could allow companies to serve more customers while hiring many more workers, thus adding to more supply than demand. And they talked about this, and that's something you're going to see. A lot of the jobs are going to be gone. They're not coming back. And what that means for the government is a really hard question. Do you pay people? And this is what they're ultimately going to decide. I think they're going to say that you have to pay people because otherwise there's no way people will consume. And they'll do it both ways. What they'll do is they'll allow the banks to make their money and take ownership, and they'll give you some of the free money, although a much smaller amount, and say, hey, you can buy what you want to buy now because you have this. And what that means for society is sort of difficult, but that's the price for having to go ahead and have people survive. And it won't be an ownership society. It will be a debt society where you're given a certain amount of credit. Sort of like the old, what did you call it? Like the old clothes shop. Like they used to have these mining factories in West Virginia where you could get paid in either company script or you would get paid in dollars, and they'd pay them in company script because then you'd have to pay for the goods, and then they'd make money on the back end. The Federal Reserve is kind of doing that to the United States of America, and I think the U.S. government's on board with it, and they'll be fine because it's a means of control on the one hand, and it's a means of keeping the economy going. And remember, the basic conspiracy of human history is very simple. People in power want to stay in power, and they'll do whatever it's required to stay there. They like this system. If the system seems messed up and continues this way, it's because you're not understanding who benefits. Let's continue. So this ends with a piece called Hold On for Dear Life. Inflationary effects are most likely to appear once the virus is truly beaten. And we're looking at that being 18 to 24 months from now, which I don't know if we survive to get through, or if we foolishly we open up the market, we do things, and then we see a bunch of people get sick, and then consumption tanks and craters even further, which is fine. If people want to do that, that's fine. I'm just going to sit here, watch, comment, and see what happens. Anyway, the crisis could weaken structural forces weighing on demand. Take inequality, for instance, which concentrates income in the hands of the thrifty rich, or in this case, the bankers. More generous post-pandemic safety nets or progressive taxes enacted to pay down large government debts could redirect income towards freer spenders, creating inflationary pressures. So could a change in policy-making attitudes. The economic traumas of the early 21st century may push governments and central banks to prefer high economic growth and low unemployment to low and stable inflation, as happened after the Second World War. Inflation is not certain to return after COVID-19, but its reemergence seems less fantastic a possibility. And they know they're betting, and we know they're betting, and this is one of the things that I wanted to cover so that you understand that. So let's close with today. We have a weird piece here. I'll just read this to you so I want you to understand what happened. A lot of people wrote me asking how it is that the oil went upside down. And so you understand what an oil futures contract is. What it is a lot of commodities are basically traded on exchange, is with the idea that people want to make money on them being worth more or less value. But at the end of a commodity, uniquely, a good has to be delivered, right? So for an oil future, we're looking at a delivery of some volume of oil to the eventual holder of the contract that has its value. And as it turns out, even though oil nominally has a lot of value, although the price has been tanking for quite a while, and that's a complicated story, that no one has any ability to save it. We have oil pumping. It's like you have water fountains causing a flood, and that fundamentally you don't want to shut them off because they're not so easy to turn back on. And so now we've reached the point where global oil production is greater than both our supply and reserve capacity, so that we now have oil that's being produced that nobody wants and nobody can take. And that's why the oil future contract went down to nothing, is literally it got to the point where oil was being paid, or I should say people were paying for someone to house the oil because they couldn't move it, so they had to pay for something to happen to it, and that's why the contracts went upside down. So I want to give you that little update before we go into this. This was updated 4 hours ago, but this is by Eustace Huang and Pippa Stevens at CNBC, so that you understand what happened with that, and then we'll close this up for today. An oil futures contract expiring Tuesday went negative in a bizarre move, showing a demand collapse. A futures contract for U.S. crude prices, and that was talking about West Texas Intermediate oil, that's oil that comes out of Texas, dropped more than 100% and turned negative for the first time in history on Monday, showing just how much demand has collapsed due to the coronavirus pandemic. And it's important to know that what it's showing you is that the economy really isn't happening. It's not. I mean, people are waiting, and that they're creating all this velocity to create the illusion the economy is working. That's why the stocks go up, and why all this money is being invested. That it's buying time for it to restart with different ownership, right? It's like a relaunch, a re-grand opening when new people bought things. But fundamentally, what it represents is a change in who owns this economy, and the fact that the economy just isn't working, and why they're rushing to put us back out there, and why, honestly, I think the media has been sort of helpful from this by underestimating some of the long-term consequences of this. I think that, better coverage of the virus, I mean, I'm completely aghast at how poorly the CDC and WHO have politicized this, and I get why they did that. The media has been pretty disgusting, too. So, but in any case, let's continue. A futures contract for U.S. crude prices dropped more than 100% and turned negative for the first time in history on Monday, showing just how much demand has collapsed due to the coronavirus pandemic. But traders cautioned this collapse into negative territory was not reflective of the true reality in the beaten-up oil market. The price of the nearest oil futures contract, which expires Tuesday, detached from later month futures contracts, which continue to trade over $20 per barrel. Right, and they're saying that the oil has value, it's just no one's taking it now. And the problem is every time the economy stays closed, it's going to crash at the end of its barrel, or at the end of its delivery for the contract. So West Texas Intermediate crude for May delivery fell more than 100% to settle at a negative $37.63 per barrel, meaning producers would pay traders to take the oil off their hands. This negative price has never happened before for an oil futures contract. Futures contracts trade by the month. The June WTI contract, which expires on May 19th, fell about 18% to settle at $20.43 per barrel. This contract, which is more actively traded, is a better reflection of the reality in the oil market. The July contract is roughly 11% lower at $26.18 per barrel. So you can see the market's betting based on stock predictions that the market's going to be open again in June and July. And if they don't make that, then you're going to see a whole bunch of economic problems. And you're going to see the energy industry itself get sort of caught up in a credit crunch because people will not help. All right, so the international benchmark, Brent crude, which has already rolled to the June contract, settled 8.9% lower at $25.57 per barrel. The front part of the oil futures curve, which is the May contract that expires on Tuesday, was the hardest hit since it applies to fuel that's set to be delivered by most of the country remains on lockdown due to the coronavirus. The only buyers of oil future for that contract are entities that want to physically take the delivery, like a refinery or an airline. But demand has dropped and storage tanks are filled, so they don't need it. There's still a lot of crude on the water right now that is going to refineries that do not need it. Helena Croft, global head of commodity strategy at RBC Capital, said on Monday on CNBC's Squawk Box. Right now, we don't see any near-term relief for this oil market. We remain really concerned for the outlook on oil near term, she said. The spread between the May and June contracts, known as the front and second month, is now the widest in history, according to KKM Financial's Jeff Kilberg. This is a phenomenon due to the expiration of the front month contract, coupled with the historic plunge in crude, he said in an email. The coronavirus pandemic has dealt a severe blow to economic activity around the globe and sapped demand for oil. While OPEC and its oil-producing allies finalized a historic agreement earlier this month to cut production by 9.7 million barrels beginning May 1st, many argue it still won't be enough to counter the fall-off in demand. And remember, for a lot of these OPEC countries, that's how they get their income, man. So there's going to be a lot of instability that comes out of the back end of that. But anyway, the International Energy Agency, for instance, warned in its closely watched monthly report that demand in April could be 29 million barrels per day lower than a year ago, hitting a level last seen in 1995. The real problem with the global supply-demand imbalance has started to really manifest itself in prices, Rystad Energy's head of oil markets, Bjornar Tonhogen, told CNBC in an email. As production continues relatively unscathed, storages are filling up by the day. And and this is a function of the stock intervention by the Fed, right? So they're basically paying people to keep doing what they used to do and work, but what happens when you have production without consumption? That's the deflationary risk, that you're going to have more supply than there is demand, and then ultimately you see price collapse because of that. And what that means is that can break the credit market in its own way. So inflation destroys it because the money doesn't buy anything. Deflation destroys it because no one's going out there to make purchasing. It's a difference of the behavior that the customers are not buying them, and that's something that's going to happen as well. We have both inflationary and deflationary pressures that are going to lead to a lot of economic problems if people don't immediately go back to work. But if you go back to work, think of who really benefits, and that's the problem. I mean, if people want to make a moral argument about economics and industriousness, I'm all for that. But let's go ahead and talk about the role of debt in it, because if you don't do it that way, you just look at the bottom. It's a really disingenuous argument, a sign of either an incomplete thought or an insincere actor, in my opinion. All right, so contract expiration. ANZ's Daniel Hines told CNBC's Squawk Box on Monday that one of the reasons behind the crater in U.S. crude prices is the impending expiration of the May futures contract on Tuesday. Front-month futures contracts typically converge with spot prices as they near expiry. There will be traders in the market who only want to trade the paper, so they will roll over into the next futures contract. That means selling the May contract and buying the June. Hines, who is a senior commodity strategist at ANZ, told CNBC in a follow-up exchange. But there are also traders who are buying for clients who trade the physical, so they hold the contract to expiry and deliver the crude or accept the crude if they are on the other side of the trade, he said. That could be why there's a steeper fall in the May futures contract opposed to the June contract. Spot prices are particularly weak at the moment, Hines said, due to a combination of a collapse in demand and a subsequent lack of storage. And that's really a big part of the story. That if oil continues to plummet, or other goods, because now we have people who are producing things that can't distribute it because there's no demand because of a change in consumer behavior, that too can lead to a credit collapse. Because you're going to have goods that will be like, why am I paying to produce this? And a lot of the banks may say, hey, you got to shut it down. And for the Fed, exactly, one of the problems for America is America's invested a lot of money in, what do they call it, shale oil, where it has to, for it to be valuable, oil has to sit about $40 to $50 a barrel. You can see the spot prices are all under 25, so the government's basically stuck funding a financially viable industry for this amount of time. And I'm not saying not to do it. They probably need to do it, because otherwise then you end up having oil dependency again. But you see all these problems that are out there that start happening when the economy doesn't function properly. Pieces don't work the way they're used to. In a normal market, the spread between the spot price and the 1 month futures contract may only be around 40 to 50 cents a barrel. At this point, it's as high as $8 to $10 per barrel. And you see this a lot with the difference between spot prices and commodity prices. You see this in the gold and silver market as well, where the spot price of buying gold and silver is a lot higher than it is, for that. So oil is lower in a spot price than it is nominally. What does that mean? That means people are using less oil and that they're trading it based on an artificial basis that really isn't caught up in. The same way, you see the same thing with gold, where the spot price, or the price of buying an actual physical piece of gold, is far higher than buying a contract for gold, because people are trading the contracts for its nominal value, whereas actually getting the gold is a lot harder. And that's a sign of an economy that's really detached from what's happening with finance, with both these deflationary and inflationary pressures. And I'm trying to make you understand this, because if you don't understand how this stuff is working, you got no hope of understanding why the economic push is happening so hard. It's really happening to get these people back to work, because they don't want to have consumption be tanked so long that credit collapses, and they don't want to let the price of the inflation they're doing to avoid showing it to you come home to roost, where it destroys the way the global finance system works. Because at that point, then we really are in a new world altogether. And I would submit to you that new world has opportunities that this one does not. Now, whether you're willing to contemplate those risks is a question of personal courage, but these things always end up being moral questions in the end, though people rarely realize it as such. In any case, Hines said prices are likely to remain under pressure into the next month or so, with demand at near paralysis. Oil and fuel tanks around the world are close to brimming, as stark evidence of the global glut, and for a function of the contango structure of the futures market, where contracts for later delivery trade at a premium to the front month. That's led to a dash by traders to release floating or onshore storage, and a bid to sell the fuel for a profit when prices rebound. Global oil storage is rapidly filling, exceeding 70% and approaching operating max. Steve Puckett, executive chairman of TRIZN National an energy consultancy, told CNBC earlier this month. So that's the other problem, right? If you're going to go out there, you're going to pretend you have an economy where people are consuming things and they're just producing them, you're going to end up having to go ahead and have a lot of supply around, but that has its own issues. And one thing you can do is, maybe, if you want to be cynical about it, if you have a deflationary situation where the actual value of goods are very low, and you keep the price artificially high, then you can cover the cost of debt servicing. And you may see something where, let's say, the cost of oil is now, for the next year, going to be half what it was before, but you actually see only a 10% reduction at the pump. That's a way where you can recoup some of those losses. But the problem is who's recouping them, and that's really what the story is today. What I wanted you to get from this episode, and why I went into this level of depth, is people are struggling and people are suffering. And I've told you many stories over the course of this program of people who have been in difficult economic straits through no fault of their own. And we see the politicization of this, where some people say it's lazy people don't want to work, and some people say it's crazy people don't want to get sick. And that argument is being allowed to continue, because if you start to understand who owns the media and who owns these corporations and the arguments they allow, I've told you again and again, there are fights we're allowed to have and fights we're not allowed to have. The fight we should be having is a question of whether or not we want to be in a debt-denominated driven system, where we are basically paying to act against our own health to go ahead and keep certain people whole, versus acting more calmly and finding a better solution that resets to a more reasonable standard. And that we could have that conversation, but it only happens if enough people awaken or enough people are hurt. And whether this is something that spirals out of control or whether it's a conscious choice that people act differently, what I want you to do is be able to walk through this empowered understanding you have more choices than you think, and don't let your immediate fears about things being done to you weaken you to the fact that for the first time in your life, we as individuals actually have a say in how our societies are run, because they are dependent on us to go back to the way they used to live. And that if we do not